Hello guys, Steven Nex here. So I know I haven't done a video for a long time, but today I want to kind of give my thoughts about the general market, especially between last year and this year, and how everything has changed, especially upon for the penny stock statistics and overall about the general market. And before further ado, let's get into the video, and also make sure to hit that like button and subscribe. Let's get into the video. All right, so let me talk about the general market first. I know penny stocks or small caps are generally not really related to the overall market, but for this year is kind of special. It's because that the Federal Reserve has printed trillions of dollars. I think 60 to 80% of our money was printed in the last 2 years. That amount of money has especially popped up the market, recovered from the pandemics, and all that excess money got pumped into the market in 2021. That's when we had DWAC and tons of tickers that's running thousands and thousands of percent in one day, and also been running 1,000% on billion-dollar cap that we have never seen in the last 5 years. That includes AMC and GME. Yeah, it's been over 6 months. The Federal Reserve stopped printing money, and all those money are being drained out. You can see that DWAC lost about 50% from the top, or more than 80%, 70%-ish. Then we had GME and AMC lost over 80% from the top, and all those tickers will continue to fade as the bubbles start being popped on the bigger caps. When you are looking at the rhythm of the general small caps, we had about 70 to 80 small caps play each year, and we have about between 10 to 15 of those tickers that can run up to 2,000, 3,000% and can provide a great shorting opportunities. But in this case, we don't really have that. It's been about over half a year. The only thing we saw was a GME and AMC bounce short and some tickers here and there that running about 200%, and majority of the tickers has been running has literally no volume. So the volume comparison between 2021 and 2022 is about 10 to 1. So that is a significant drop without the Federal Reserve keep giving out free money to the retails and buying stock market with no brain. So now let's take a look at the general market, which is the S&P. S&P, I normally don't trade this one at all. And you can just see that every single dip from my personal research has been held up by the government assistance. So every time when they hold up the stock market, they have to either reduce interest rate or they have to print money. So now it has come to a point that the Federal Reserve cannot keep printing money because the demand is too high. I mean, they certainly can, and it will cause a hyperinflation. Right now, inflation has been kind of crazy. So if they keep printing money, then there's no hope. And the interest rate is already at 0, so it's going uphill from here. I know you can go into a negative interest rate area, but that's certainly not a good idea. So when I look at the market, and a lot of people tend to look at yield curves, bond interest, I tend to look at the market in a general term about how much is the entire market worth. I know there's tons of factors in the overall market, and this is the reason why trading the S&P is really difficult, because there's way too much factors that's being involved in this market, and it's extremely difficult to time this market also. That's why majority of people lose trading these ETFs, and they tend to buy it and hold for long periods of time. That's how they make their strategy work. But in terms of trading short term, seasonally, it's relatively difficult. So right here, I'm going to give my general thoughts about how does S&P can be related to the small caps. So whenever you see the small caps is dying now, especially with a significant volume drop, and a lot of people are withdrawing from the market. When they're withdrawing from the small caps, they're going to withdrawing from the mid caps, then to the big caps. That's how the market works. So you can see a bunch of the companies are slowing down: Netflix, PayPal, Facebook, and we're slowly approaching into the much bigger cap. Last season we had Amazon. So all those earnings is the sign of the economy is slowing down. With the upcoming quantitative tightening, that's going to affect the market even more. So we're going to see some type of drawdown, just like we had in 2022, but not as dropping 20-30% in 2 weeks. But we should have some type of similar actions in, I would say, between 3 to 6 months. And after that, the market eventually will correct itself and starts to recover. That's when we have all the opportunities in the world to either dip buy and also be able to catch all the small caps, because when the market is recovering, that's when the market has the most play, that every single small cap is going up hundreds of thousands of percent. That becomes a great of shorting opportunities later. But you can see during 2020, after March, especially after April, we had 10 to 15 tickers between April to October. That's when all the small caps and mid caps tends to run thousands and 2,000% in one day. And for all the small caps traders out there, make sure to be patient. Don't try to rush in, because the volume is definitely not there. When the volume is really low, you cannot size in as much as you try to size in 2021. The volume is completely gone. So right now, try to be conservative. And whenever you are seeing a ticker that's going up 100-200%, and when the volume is really low, make sure. Let me give you an example about one of the tickers that happened last week, SIDU. This is a classic gap up short. It went from 3.5 to 4.5. It gave you about 20%. The open is 4, so it went to 4.5. It gave you about 10% push after the market open. The general statistics in 2021 for gap up short tends to push up to 20-30% in the first half hour to 45 minutes. So that statistics has significantly dropped, with the $4 only pushing up about 10%. That's really weak compared to the statistics in 2021. And also you can see that the stock is trading 95 million volume throughout the day, and the stock dropped 50%. So when the stock tends to get really crowded, it becomes really short heavy, and they either pulls back and consolidate and re-break out later in the day in 2021, or they just don't move throughout the day and drop in the next day. But in this case, the volume is definitely not there. And when the stock is trading tons of volume and still dropping, that means the current market condition is not as great compared to before. And another factor is majority of the gap up short, their maximum pulling back prices is around $3 to $4. As I mentioned in the previous video, that if the stock tends to drop into the $2 to $3 zone, that's where stock becomes a little bit too cheap, and a lot of retailers can buy tons of shares, and from there it becomes really difficult for a stock to drop, especially below $3. And when you are seeing penny stocks gap up short dropping under $3, that's a really very sign that tends to tell you that in the following place, if you see the same thing happen on SIDU multiple times, you will have to adjust your current strategy that to pull down your max reward price. So whenever I see a ticker going from, let's say, $6 to $3, $3 is normally my cover point, because I do not think it will go lower than that, even though the statistics is showing you that typical gap up short can fade 75% from the top. So in this case, even though the stock only faded 50% and is dropping to the $3 area, I will still cover and give up my 25% reward by the end of the day, because that's the maximum drop-in price. Right now, you will kind of have to adjust your statistics down to the $2 to $3 area, probably the low twos, to be able to get the max reward. So I'm still tracking tons of statistics, but currently everything is changing, and also with the general market, I'm expecting that the second half of the year there is going to be much more slowdown and probably no plays on penny stocks, and probably more panic on the overall market. Then we should have a recover by the end of the year or the beginning of next year. So alright guys, that'll be the end of this video. Thank you very much for watching. I will see you guys in the next one.